Morning, everyone. This is Brian here from Compounding Chronicles, and this is the very first episode of hopefully a handful that I'm going to create. Just showing how I'm compounding a $50,000 account. Back in November, I started with about 45,000 in this M1 brokerage account that I'm going to share, and I've been using a little bit of margin through M1 Finance, which is about 4.15% interest rate annually right there. I'm going to show you how I kind of overlay light margin with pretty aggressive deposits mixed with just compounding the portfolio, and hopefully we're going to have some fun with it. I'm going to show you how I think using margin could be safe and why I want to use it. People invest a lot with real estate. They take loans out to pay for that real estate. You're taking on a very similar risk there. You're putting something at stake usually for those um, for that money to be handed to you to go ahead and buy real estate. So we'll go over that again, very light. For every $6 I deposit, I'm using $1 margin. So every Tuesday, which today is Tuesday, the account will be funded with $265. And either Monday or Tuesday of that week, $50 will get put in from M1 Borrow into this M1 Finance account. So that'll be my 6-to-1 ratio right there. So we'll have a little bit of fun. Again, this is not financial advice. I'm not a financial advisor. I'm simply just trying to share what I'm doing with the group because I do like to just show this stuff. So, for years I've always made content via YouTube, mostly about options, but I always had a passion for buy and hold, slow and grow, compounding investments. So here we have it. You can see the $52,570 account. Right now, there's $320 in cash in this brokerage account, which will get put to work here in upcoming about 24 minutes. That's when the market's open up here in Pittsburgh on the East Coast. So in about 25 minutes, the market will open, the money will get deposited, and we'll get that $320 in cash to work for us. So that's going to be kind of interesting, pretty fun. But again, more importantly, hopefully the people who are watching this have a good sense of compounding. If not, we're going to go over it. But I'm going to add a little bit of a different overlay, and we're going to throw in some margin borrowing into this project. And we're going to grow, see how we can grow this $45,000 account over time. Again, using light margin and going from there. So I'm going to show you what I want to do. Just using you can see this account here is broken up into three pies. And individually, each one of these, besides IBIT, holds, Dolly holds three different positions, this is a dual momentum strategy. Every month I'm getting a different signal. I can hold these three. I can hold, up to 5 or 6 different holdings, which I get signaled every month for myself. So I'm not really trying to show this too much. I kind of want to show the compounding part of it. And Titan is kind of the opposite. It's a buy and hold. A strategy which with my weekly deposits will go into rebalancing every month or every week, depends on how you or I deposit the funds. But if you were not adding any new funds, you'd go in there annually and do a rebalance, and away you go. So very strong. So in the last 20 years I've been investing. Come June will be 20 years I've been putting money into the market. The last 10 years I really supercharged it with a lot of um, research, a lot of finding how to, get some significant alpha on the SP 500, which I have. I found some, just touching real quick on some of the things that I'm doing. So that Titan you see, just in the last 21 years. For those that are kind of new to investing, these won't look like too drastic numbers. But if you've been investing for a little bit, you know how kind of hard it is to consistently beat the SP 500, which over the last 21 years has returned a nice solid 11% with a max drawdown of 55%, which is pretty rough. And that was during the financial crisis in 2008. So Titan, on the other hand, has actually had about a 5% alpha on the SP 500, returning about 16% in that same time frame, with actually almost a 10% less max drawdown, which is significantly huge. So I'm extremely happy with what I've been running for the last few months. What I found whenever I actually created this one myself, the Dolly momentum strategy was one I stumbled across, and it is a very strong strategy. So I'm not going to get too much into the weeds for this first video. I want to keep it between 10 and 15 minutes long. But here's Dolly. Dolly, this is from 2012 till present. This has returned actually even more annual return on a dollar basis, returning almost 20% with a max drawdown of 10.4%. And at the same time, the S&P 500 dropped on max drawdown about 24%. So pretty strong stuff. This ratio, annualized return to max drawdown, is about a 2 MAR, which is very good for what I like to almost consider a buy and hold with a one-time strategy. So I'm not going to go over this in this video. I want to keep it again this short, but I do want to show you. We did start off a spreadsheet early on, November 3rd. This account had about 45,000. You can kind of see my margins. Every month I put, my total margin usage right now, as of 1/20/2026. I have $500 in margin loan out, and I have a cumulative of um, $2,775 deposited. So pretty strong. We're going to go over here and we're going to go see what all these numbers are. So we deposited 3,725. And actually, if you go over to here, you can also see these numbers. Um, you can see total cash deposit, total margin deposit, and you add those both together, and you have your 3,275. So again, this dashboard is going to be one of our good friends. You can see our risk metrics, our margin metrics. So all this stuff tells you kind of how much we've made. So in the last 3 months, cumulative margin, which is goes month by month, it's fairly accurate. Cumulative margin profits was $12.25. And if you go to this margin data, everything you see in green, I do at the end of every month, even though this is only the 20th. This month, I kind of just did a mock um, look of what it's going to look like at the end of the month whenever I put these numbers in. So you can see interest paid every at the first week of every month so far. We've paid $1.01. Again, that all takes into account over here in the dashboard page where you can see $1 cumulative. So we've actually on our $500 in total margin right now, through the last 3 months of dollar cost averaging $50 every week, made about $12.25 on that margin, and it costs us just about $1. So we keep that up. Pretty good stuff. And again, as time goes on, you'll see our win streaks, our lose streaks, best and worst months. So we're going to have some pretty good stuff. So this month, as of right now, has been pretty strong. Um, I think the S&P 500 is sitting right around, which we can get into that. Let's go to something like Dolly where we're up. That's what's kind of nice about this. We can kind of benchmark where we're at since starting this. So I'm going to get rid of VT, which is a total market fund. We're going to get rid of that, and then we're going to go to the SPY. We're going to look at the SPY and just watch our performance. We're going to do this periodically, and maybe not every video. We're going to go to all, which you can see we started this portfolio back in November 21st, using Dolly, November 7th for Titan. So we're going to go to SPY, pull that back up. We're going to kind of track our performance. So Dolly in that same period of time, starting on November 24th, when this money got deposited into Dolly, we're at 5.3% versus the SPY 3.73%. So again, this is not financial advice. I'm not a financial advisor. For the average Joe, I would say put all your money in SPY and watch it grow. But for me, who has been researching for 10 years, I feel pretty confident with what I'm doing here. Depositing into my dual momentum strategy and my buy and hold strategy. So pretty cool stuff. But again, it's going to give us some content for further videos. We're going to get back to the profile and see this. But what I want to do before we finish this video and keep it shorter, we're going to go to the borrow. We're going to minimize this. We're going to show you kind of how I'm borrowing and what we're borrowing against. So you can see, this $500 has been going into my M1 borrowed account, my brokerage account, and we're right around 2% borrowed. So $500. It shows you right here the value of your investments would need to drop 98% or $51,713.20 to face a margin call. A margin call is when they're going to start liquidating my positions to pay themselves back, and you do not want that. So again, I'm using safe overlays, not only just using borrowed money, I'm also depositing my own money every week. And I'm going to keep this number, in check. When I get down to about 90% margin health, I'm going to kind of slow my roll, stop depositing funds, and let this get back up to say 93, 94, 95% before I start borrowing again. And if we start getting down below 90%, there's a good chance I'm going to start using my weekly deposits on my brokerage account and kind of direct them back to this M1 borrow and get this back up to about 10% margin use max and kind of go with that. So pullbacks, we're going to have to do a little bit of maintenance, a little bit of upkeep, but all in all, if you keep this number fairly safe and you have some pretty solid investments that you're seeing that I'm showing, I think we're going to be set up for success. So I do not encourage anybody just getting into this to start using M1 Borrow. I do not think margin is good for everybody. The wife and I have created a seven-figure portfolio overall. We are pretty good with our investments. We're pretty good with our investment strategies. I just figured, just with my research, I was looking at getting into real estate. I was looking at getting second mortgages and HELOCs and everything, and those rates are 7% for a HELOC, 5.5% for a 15-year fixed rate. So this is a little experiment where I'm using light margin. And again, real estate isn't perfect. Sure, you get that weekly, monthly. Um, Rent check, but guess what? Hot water tank goes out like I had it at our house. You need a new roof. That all takes and that all creates unfortunate events, which could bring a pullback in your accounts. And that's kind of what I'm expecting to do with this margin. Sure, every year is not going to be a run up where I'm making, that 16%. Some years I might make 30%. Other years I might make, look at this Dolly performance, for instance. Last year in itself, this momentum strategy was up 45% versus the market 17.7%. But then you have some years where you underperform, even as 25%. A year like this, we made just 4.66%. But guess what? The S&P 500 was down 18% this year. So I don't expect this momentum strategy to be positive. There's reasons why I'm only running 10% of this portfolio, this Dolly strategy in. Um, this brokerage account, and we're going to get into that in upcoming videos. But I kind of wanted to share my journey of taking a $45,000 account started back in November, showing the compounding between investment growth, between strong weekly deposits. Like I said, I'm depositing $265. And then also doing a light 6-to-1 ratio of margin overlay into there and kind of seeing what we can do to get this some returns here. Uh, Back testing, like I'm showing in test full and portfolio visualizer of both these Titan and Dollar strategies does not show forward results. And today, tomorrow, the next week, next month, next year marks could plummet and everything you see in the back test could be totally changed. But for now, I'm going to take 20 years of back testing or something going back to 2012 with a strategy like Dolly and take my chances here with this $50,000 account because again, this $50,000 account is kind of a relatively small percentage of our overall net worth. So my 50,000 might be somebody with a higher net worth, their 500,000 they can use, or someone with a smaller account, it might be their 500 or 5,000, or, add your what this is to you. So this is not a play account. By no means is $50,000 a play account, but I think with strategic margin usage and strategic, investments like I have, or just the S&P 500, I'm not trying to sell you anything I'm doing. There's a good chance I never tell you guys what I'm doing in this Titan portfolio, which is a buy and hold portfolio, or even Dolly. But I might show the monthly signal just to kind of show you where I'm at and go from there. But I want to keep this mainly just showing how compounding works, how possibly using margin long term can really be a financial tool that everybody likes to kind of um, talk bad about, mainly because I don't think we know, or some of these brokerages are charging 10% margin. The spread isn't there. So if you can make 10%. This is before taxes on your investment, and you're only paying between 4 and 5% margin loan. It's a decent spread at 5%. So with that, I'm going to end this video. I'm going to upload it. So what I need from you guys to do, if you think this is interesting, like, subscribe, and join. I appreciate it. Thank you.